Hello and welcome to the PINCast, the podcast presented by myself, Richard Bowser, editor and founder of Property Investor News, the monthly magazine which we launched 20 years ago back in 2002. If you want to listen to factual, no-nonsense interviews, insight and opinion from some highly experienced and respected property professionals, then this is the podcast that you really need to tune into on a regular basis. Today, I am joined by Louise Reynolds, who I've known for many years. And Louise is going to talk with us about the thorny subject of due diligence and what we need to be thinking about as investors, but also on the other side of the spectrum with what we need to be thinking about with the developers that we're going to be perhaps investing with, or from the point of view of developers, what they need to be thinking about when they are approaching investors for funding. So good afternoon, Louise.
Hi, Richard. Yes, I think the last time we chatted was when I contributed to your one of your PIN magazines earlier on in the year.
Yeah, that was in the May edition, Louise.
Yeah.
Now, in that magazine, May 2023, for people who might be listening to this in the future, you talked about strategies which you thought were applicable in the current marketplace. Obviously, it's constantly evolving, as we all know, and different things are happening. But we're now today going to talk about due diligence. So for those of you who are listening to this or watching this PINcast and may not have read that previous magazine and maybe not aware of Louise and her background, Louise, tell us a little bit about yourself and what you do in property.
Yeah, so thanks for the introduction, Richard. So I think it's important to say risk averse. So I'm a risk averse investor, landlord, and latterly developer. And that's important when we get into the conversation on due diligence. But I'm also a property finder. So I also help others. So expats who are looking to invest in property, but who aren't necessarily based here in the UK. So I'm a property finder for expats. And the risk aversion comes in because I have to get comfortable with things before I invest and before I do them. And so it's kind of become a hallmark of what I do, not only for my own projects, but also on behalf of others. So it's a core element of everything I do, whether my projects, doing stuff on behalf of others. And it's interesting to relate, in a way, property is like my third career. I have a business background. I've got over 2 decades worth of experience in business. I started out in sales and marketing roles, but I've also got about 14, 15 years worth of management consultancy. And the relevance of that is I learned some tools and techniques in management consultancy that I apply to my business, and particular to doing due diligence and conducting due diligence, which makes my approach a little bit more thorough than maybe the average person. And I have some frameworks too that are useful. And in fact, as you know, because we've bumped into each other on the property circuit presenting, I presented on the property circuit, and someone approached me and said, look, you know, I'm busy, I'm a professional, there's this deal, I really want to do it, just don't have time to check it out. And so that's actually one of the latest pieces of work that I've done, which was not only assessing the deal, but also the scope of the market, the dynamics of the market, and how that deal fitted with her and her approach to investing.
Right. Okay. Yeah. I mean, obviously, as you pointed out, and we both know, there are an awful lot of property networking events that take place on a literally weekly basis all around the country. And sadly, there are some people that lurk in that sector that are they're looking, for people that are maybe a little bit naive, or they themselves are a little bit naive. They think they've got a fantastic project. They may have done a deal before. It's worked, but it doesn't necessarily mean it's going to work again. I don't necessarily have a great deal of experience, and sometimes don't have much financial standing either. So, people, I agree with you. And the individual that you just mentioned, what they said to you about not having much time, and that's the problem now, isn't it? You've got people out there sometimes that they've got money or they've got access to money, and it's burning a hole in their pocket because they want to see a better return maybe from what they were getting from a bank account a year or so ago. And they want to, get a 10, 15, 20% return on their money. But of course, the higher the return,
the more risk. And that's where the due diligence comes in, isn't it?
Absolutely. Absolutely. Yeah. And I think that there is a bit of an issue with people wanting things to be that way. People want to think that they can get double digit returns and not have to put much effort in. Or sometimes some of these deals are overpromised or they're quoted as net yields. And in reality, it's only when you look at contracts or you get into the nitty gritty detail that you can see that the potential for achieving that quoted net return is really quite unrealistic.
Yes.
Yeah. So yeah, it's the way that it goes. So yeah, it's very important, even if in a situation where I've just done a piece of work for a client, that they actually do, just think it through and follow up on a couple of the sources and actually make the decision themselves, because I don't make the decision on behalf of someone else. What I try and do is arm them. I try and inform them so that actually when they're not sure, I move them to a point at which they're decision ready, when they can make an informed decision. I don't think that due diligence, completely eradicates risk. It doesn't. And I think that's dangerous to think that, but I think it really helps to make an informed decision. So you're aware of the risks, but you're willing to make the trade-off and weigh things up. And then you're going in with your eyes open rather than blindly diving in.
Absolutely. I mean, I think, as mentioned earlier, I mean, there's this balance, isn't there? We all want big reward, but conversely, are we prepared to take those bigger risks to achieve that big reward? Equate it quite simply with the roulette table. How many spins? I don't know, whatever is the numbers on a roulette table. You can go for a 50-50, or red or black, or one, or whatever it is, or you can go on the spin of the ball and whatever it is, 30 or 40. And obviously you'll get a bigger return. So yeah. Property investment is all in reward, and yeah, I mean, it's the same with I think you mentioned earlier when we were talking about yield and net yield being, obviously that's the thing people need to be focusing on. There are obviously in residential property, there are high yield opportunities in marketplaces that are maybe not so economically buoyant, and you will get a better gross yield, but quite frankly, you'll not get such a good net yield because you'll probably have more voids, you're going to have more contingencies to deal with, et cetera, et cetera.
Yeah, and absolutely, and also thinking about exit options, because someone who's based down south and they've got some parts of their portfolio based down south might have a number of different exit options. But if you're looking for a high yield in a not quite such affluent area, you're not going to get the capital growth and potentially not going to be able to repurpose an investment quite so easily. So there are a whole host of considerations, including exit options, exit strategy, and having a number of options rather than just having one avenue open.
Yeah, no, I mean, I was talking to a very experienced individual the other night about the current marketplace, particularly in some parts of London, or probably most parts of London at the moment, in respect of the sale of leasehold flats. So which is obviously a trickier marketplace than it was, 18 months ago for developers, and obviously some people are literally catching a cold trying to sell stock into a buyer market where obviously the cost of finance is considerably more than it was, although things are obviously easing up a little bit now on the cost of finance. In many cases, there's sort of 150% more people coming off a fixed rate deal compared to what they got into a few years ago.
Yeah, absolutely.
Yeah. Okay, Louise, so we've sort of outlined your background and what you do. So what are the typical errors that you see property investors making, if you could sort of summarize a little bit?
I think what people naturally migrate to when they're talking about due diligence is they automatically think it's just looking at the property, it's looking at the deal, and does it work in that marketplace? But for me, a really important strand of due diligence is checking out the people that you come across and the people who are part of your property journey. And it's really important that you do look at the property and the deal and make sure it stacks, particularly in today's market. There are too many deals that are being blitzed and glamorized and sexed
Yeah.
up so that you know, entices people. But it's really also the people involved. You know, who is it that's selling that deal to you? You know, what vested interests have they got? And I think, you know, people can make or break a deal as well. So if you think about all the people you're involved with, you might be using a sourcer to find that deal. So it's important that you've checked out that sourcer. It's worth knowing the pros and cons of the estate agent that you're dealing with, or finding out as much as you can about, if it's a direct-to-vendor relationship, who the vendor is. But it's not just down to that. I mean, if you're looking at doing some sort of refurbishment or added value, then really, you know, you really need to be making sure the contractors and builders are good. But also any of the professionals that you meet along the way. You know, I do think that some people get a bit blasé when they see someone's got loads of letters after their name, like, you know, a Rick surveyor or, you know, a lawyer or some of these professionals, and that's great. But not all professionals are made equal. So someone might be qualified up to the hilt, but that doesn't mean say they're the right person for the job that you want them to do. So if someone's looking at, I mean, it's a bit more, you know, exchanging and doing delayed completion, that's pretty run of the mill, but it's not your normal conveyancing process. Or if someone's looking at wanting to do an options contract, that definitely isn't going to be your run of the mill conveyancer who would be able to do that. You need a solicitor that's got experience and knows how to word things and set things up correctly. Otherwise, the whole deal is going to come a cropper. And even with architects, you know, you can have an architect who's the most brilliant and creative designer in terms of creating a new look for a property, but they might not have the technical or detailed skills to do a really good job of the technical building control drawings, or maximising the space, or not working effectively to deadlines. So, you know, I think it's very easy to think, oh, someone's got a load of letters after their name and therefore they're going to be great, but it really isn't always the case. I remember using I've used various architects over my property career, and some of the best advice I got was probably from one of the least qualified. So I used a technician. I mean, she couldn't actually do the piece of work. She was out of area, and she felt that we would be better off working with someone more locally who had built up relationships with the local authority and the local planning department. But what she did was really practical and pragmatic. And so she started out, well, how do you live your life? What do you know, how do we live? What's the property designed to be? If it's a family space, then this will work really well, you know, more open plan. So she actually started at the end and worked backwards and actually came up with a great design. And it was a design that I didn't get from the architects who helped getting planning permission, but they had a lot more letters after their name.
Right.
So sometimes it isn't always about being bamboozled by qualifications. I remember a client who I was doing some property finding work for, found a really great property that had a damp issue. But I thought that it could be addressed. I've worked with architects before to sort out damp issues, and it's all about getting to the root cause of the problem. And he preferred to listen to a RICS surveyor because he'd got the sort of the official RICS surveyor letters after the name. Then what I was suggesting, having been through it and done it a number of times before, and having used an architect who really knew his way around sorting out damp problems. So I think that the people side of things, and it's not just you know, the contractors, it's also the professionals, and also, you know, if you're doing JV partnership, or you're doing some kind of a deal with someone else, you really need to be checking them out as well. And I think that people don't realize that enough. I think a lot of people take at face value what others tell them.
Absolutely. It's interesting. There's a couple of points I want to pick up on there. I mean, you mentioned about the professionals and architects, etc. Talking with someone who's just been featured recently in Property Investor News about their choice of planning consultant for a project that they've put together now. And they chose the planning consultant on the back of having done their research, their due diligence in a specific area to see what similar projects that they were looking to do had received planning approval for the strategy that they were looking to apply, and noted that a particular planning consultant seemed to be the go-to person. So they chose that person as the go-to person, and it worked because that individual, that planning consultant with that local knowledge and local contacts and understanding the nuances of what the local authority was looking for in that area, the planning, that they were able to achieve their aims.
It's interesting, isn't it? Because on my recent development project that I finished earlier on this year in Surrey, which was a Victorian semi, which I think you used some of the images for that in the
we did in
magazine.
The article in May. That's right.
Yeah. So one of my key parts of that project was retrofitting. So it was extending, but also retrofitting and getting the energy efficiency up. And that's one of the things that I did. I went onto the EPC register and looked at EPC inspectors who were grading older properties C or above, and actually selected an EPC inspector who had recently graded some properties, some period properties, quite highly. Yeah. So I felt that asking him some questions would be quite useful, and that worked. I was targeting a C EPC, and we got a high C EPC. Obviously did all of the work on the installation and made sure it all worked. But yeah, so it's a similar principle. You want someone who understands what's involved and knows how to give that kind of grading.
Indeed. So, Louise, just moving on a little bit, we obviously talked a little bit from the investor perspective and projects and people as well. Obviously, we're in a marketplace now with social media, with Instagram, and I think you mentioned it earlier. I think you used the phrase "sexed up," the way that people present, these very glamorized, staged images, and the sort of, now it's becoming a bit of a cliche, isn't it? Mustard cushions and dark blue or whatever, as the it's moved on obviously since a couple of years ago when that really was the cliche. I think bio now seems to be the thing, doesn't it? What you mentioned about this over glamorizing, what are your thoughts on that? A little bit more about just being aware of what, quite frankly, it's not necessarily cynical, but people now really can showcase themselves and their projects incredibly well on social media platforms like Instagram, and in effect appear to be, the honeypot.
Yeah, and I think that there's this aura that's sort of bestowed on people in your network. So if you look and someone's connected with someone who you respect on LinkedIn, there's I think too easy an assumption to make that, they must be a decent person then because they're in such and such a circle. But I think it's always important to check. I mean, lots of people connect. I mean, I tend to connect with people who I've met. That's not always the case. But some people have got a very different philosophy about who they connect up with and just go for the numbers and the volume.
Yes.
Even though they might well be a very ethical person who you respect, doesn't mean to say that their policy of who they connect with on LinkedIn or wherever else it might be is the same as yours. And it's always useful to check whether that person does actually know them and has met them. Yeah, I always like to meet up with someone in practice or be able to talk to other people who have met that person. And it depends what it's about. If it's just to go and meet them, that's fine. But certainly I'll be wanting to do a lot more checking up. I once got asked to act as an agent for a development project. And I wasn't sure about the individual who was the master agent and the developer.
Right.
So I did a bit of digging around and found the LinkedIn profile of this person, and that looked great. Just going back to what you're saying, it all looked glamorous and great. But there were some gaps in the history of that person, and I did a bit more digging because I thought that this person had been involved in a previous company that had folded, and not in particularly great circumstances. So that's when when there's a bit of a gap, or there's something that raises a bit of a question mark in my mind, then that's when I dig around and do a bit more. Then I looked on other media, then I did Google searches for reviews, and interestingly, there were no reviews anywhere for this particular company. And that's always a concern when there's no reviews, whether it's a Google, a Facebook, a LinkedIn, whatever. Clearly there's some level of suppression of reviews going on. And then I also did the company's house checking out.
Yes.
And there were a few more anomalies in terms of there were a number of companies, but there was a bit of inconsistency in the way that the name had been spelt. And his wife was on one or two of the companies, but again, her name had been spelt slightly differently somewhere else. So for me, digging around and there being gaps or idiosyncrasies or things that don't quite stack up, raises further questions. And I think that's when you need to sort of dig a bit deeper. And it depends how important that is. For me, reputation is important. So, you don't want to get involved with something that's not good or doesn't appear to be ethical.
No.
So I think that's just a scratch and sniff. You sort of scratch it, does it smell right? And if it doesn't, just look at where the gaps are, where the mismatches are, and just delve a bit deeper. And we know Companies House isn't perfect, but it certainly does paint a bit of a picture if you know what you're looking for.
So act in haste and repent at leisure.
Yeah.
So that's great. It's a really good comment. I just, as you were talking, I'm thinking through, and certainly, your reference to the likes of LinkedIn as an example. I've got a pretty decent following, but nothing like some people have got, as you say, because I'm a bit more wary of who I want to be associated with. I'm sure there'll be somewhere in X thousands that I've got. I don't really follow it that much, but I do try whenever I get an invite to check people out a little bit before I accept an invitation to hook up online. But of course, there are people that have got tens and tens of thousands of contacts, and particularly these days with fake profiles and all this type of stuff. It's people do need to be a little bit wary. Personally, that's my thoughts. Quality rather than quantity.
Yeah, absolutely. Yeah.
Okay. So you touched on, in terms of due diligence on individuals and their history. Obviously, as you say, you've got Companies House. You can check on directorships, and as you say, it's not perfect, but that is certainly a way. Any other sort of online tools for you to recommend or suggest that people look at using? As you say, LinkedIn is obviously a good one for anyone that's
just exhausting everything that's free. So the social media, checking land registry is a few quid if you want to check something, but you and I have come across situations where developers have said, I developed this project, blah blah blah, but they're not always the person that's owned the project, and that may or may not make a difference. It depends on what it is that they're claiming. But some people have got a huge portfolio. Is that a rent-to-rent portfolio, or do they actually own the assets? Again, that might not matter, but it depends what it is that they're claiming. If someone said that this was my main development project, so you can go on land registry and you can check things out. And actually, that is a really good sense check for if you're investing, just to, I always think the due diligence is good to start early on in the process. I think that, again, some people are lulled into this security that, it's okay, my solicitor will check all of that out. They check the title deed, so that'll all be fine. But if there is an issue with the title deeds, by the time the solicitor gets to it, you've lost 8 weeks and spent a whole load of money. Whereas if you'd have just checked the title deed, which costs £3 to download from land registry, you can tell pretty early on if there are covenants, what was. So there are some things that you can do. So yes, there's all the social media, there's Google searching, there are review sites. For me, it's actually building up a picture that's consistent and reflects what that person has said. And if that's happening, I mentioned my background in management consultancy, and I said I brought some of the tools and techniques over for my business.
Yes.
There are a couple of simple principles, one of which was triangulation. If someone is in your life, whether they're, a JV partner or they're a contractor or whoever it might be, someone who wants to be a mentor, you can start with the triangulation where you get 3 sources of information. And this works on checking out a property and the deal as well. And it's checking out 3 independent sources of information. Now, one could be social media online, one could be Companies House, one could be, a review site, or speaking to someone who really knows that person well. But so if you've got 3 points of information, 3 sources of information, and they all coalesce, and there's a consistent picture, and that's good. But if one of those pieces of information doesn't match up, or if it is important, like you're going to go into a JV partnership with someone, then, you can then go to the next step of searching for 7 independent pieces of information until you get no new information.
Right.
So then you've got a bit more of a robust thing in place. So I think that there's an issue with due diligence. I mean, I'm risk averse, so there's a danger that you over check things out and you over research, and then you get into risk, analysis paralysis.
Yeah.
So I think that if something's just useful, you want to do a quick check, I would use triangulation. But if something doesn't stack up, or it's really quite important, like you're going into a JV relationship or you're going to be mentored by someone, then I would look for 7 different pieces of information or sources. That could be speaking to 2 or 3 people, as well as doing some desk research. Yeah. I think that's important to do because I think it's important not to be lethargic about it and a bit lazy, because you might come to regret it further down the track.
Yeah, I mean, without naming names, there are dozens of instances over the 20 years we've been publishing Property Investor News, people that have suddenly sprung to fame or relative fame in this marketplace and have a good reputation for a little while, and then basically they just get too carried away, and then circumstances occur and they're over leveraged, allied to over ambition. And, whether it's the financial crash or Brexit or of late COVID, there's something that comes along and they're just, they're skating on thin ice, basically. So they may have had a good reputation. They may have repaid, a lender 4, 5, 6 times previously. There's one incident I can think of, again, not mentioning a name, but in the last few years where, a developer built up a pretty good reputation, it would appear publicly, repaid quite a number of loans, and unfortunately underneath the surface things were just getting a little bit and then stuff came along and they got knocked out, and unfortunately an awful lot of investors suffered as a result.
Yeah, and it's difficult, because I think that there's a danger in complacency, both from an investor's point of view and a developer's point of view, because there are always problems, and it's how you deal with them, anticipate them, solve them. So that shows the character of the person, I think.
Well, indeed, yes. No, that's the thing, isn't it? Yes. People's true values and. Okay, great. Louise, is there anything before we close off? Anything specifically that we've not really talked about? Obviously, this is a big subject, and let's not kid ourselves. A 30-minute chat between us isn't going to, but it might give some people a starter for 10, and maybe prompt them not to act too much in haste and subsequently repent at leisure, as I said earlier.
Yeah. I mean, and due diligence isn't the sexiest thing, so people aren't. It's not the first thing that they rush to do. But I quite enjoy playing the detective and following through on things. And if it can help you stay a lot safer, then I think it's a great thing to do. And it doesn't have to be all consuming, but it's just good to know where you stand so you can weigh up the risks. So I've got frameworks and models. So if anyone wants any help, then I'm happy to help. And at some stage in the coming months, I will be developing a module on due diligence for those who aren't certain about doing it, or want to do sort of a DIY, do their own module. But yes, I'm around if people want some help.
Okay, and how do people get in touch with you, Louise? We can obviously see your background. Your brand is Property Venture.
Property Venture, yeah. So my email is info@property-venture.com, and I am on the mainstream social media, so Facebook and Instagram, louise.a.reynolds, Reynolds REY. LinkedIn, I'm just Louise Reynolds. So I tend to be pretty active on LinkedIn, and I'm around on Facebook and Instagram as well. So yeah, someone can message me there or email me. My company is property-venture.com.
Brilliant. Well, Louise Reynolds, thank you very much for your time today on this latest PINCast on due diligence. And Louise, I look forward to seeing you at one of the upcoming property meetings. Thanks for your time.
Cool. Thanks very much, Richard.
Thank you for listening to this latest PINCast from Property Investor News. Make sure you've subscribed to be notified when the next episode is released. Register for the PIN e-news service at www.property-investor-news.com, where you can also sign up as a magazine subscriber and get the monthly print magazine. By subscribing to the magazine, you can get access to 17,000 articles which we've published in the last 20 years, alongside some 300 webinars and video interviews.